Right, so that is actually really good news because that is a pretty significant property, you know, when you have a $1.5 million 4-unit.
I would assume it's got to be in a nice area and a nicer unit.
Hey, welcome to Florida Real Estate TV. I am Maciek, your realtor, and this is Chris, my local mortgage lender. Welcome, Chris.
Hey, thanks, Maciek. I'm happy to be here.
Hey, listen, we want to talk about something that's really important. If you're one of these people that might want a house hack, and if you don't know what house hacking is, it's really simple. You buy a property, you put people in it, whether they're living, you know, in a bedroom, or maybe it's a duplex or a 3-unit or something like that, and most of your mortgage payment, if not all of it, is covered by other people paying it. All right, so let's get into how does that look like, especially from the lender's perspective. So Chris, let's just start off with small multifamily, which is basically 2 units, 3 units, or 4 units. What does that look like? Is that like a regular mortgage? What is that?
Yeah, sure. So thanks, Maciek. There's 2 types of ways that you can utilize mortgages to purchase multifamily housing. And one of those ways is an FHA loan, which is common. People have heard about this way before, 3.5% down on any 1 to 4 unit property. But recently on November 19th, the mortgage industry, Fanny and Freddy, updated their guidelines to allow for conventional 5% down purchasing multifamily homes. So in the past, 2 units used to be 15% down conventional, and then 3 and 4, 25%. So Fanny said, it's all right, we're gonna do this as long as you're gonna live in one of the units. We'll do it at 5% down, which is huge when you talk to house hacking. And the big gain here is that there's no more sustainability test that was required by FHA. Okay. Without going too deep into that, basically when you did an FHA loan and you had other units, there was a test that had to be done to make sure that the other units can pay for the mortgage payment, right? And most often in 3 and 4 units, you would fail. It wouldn't work. But with conventional, they don't have that test. So it really streamlines the ability for you to house hack and get into a home.
Okay, so let's really break this down on a super easy level. What I heard you say is that now, it used to be that pretty much the only option if you have 5% down or a very low down payment was FHA, right?
If you're buying multifamily?
Yeah, and now it's changed that you can go conventional loan. Right? Correct. And are conventional loans, better interest rates? Why would someone want to go to a conventional loan?
Great question. So, at the end of the day, if you've got good credit, when we're looking to approve a client for a mortgage, we have kind of like a list, a rundown, if you will, that at least I've created in my head, right? So you got to ask some questions, are they veterans? Where's the house? Is it going to be something in a rural area, right? So, but immediately the first 2 loan programs that strike a loan officer is conventional and FHA. Mm-hmm. So credit related. So let's just say credit scores are the same, always going to go with a conventional mortgage, just because you don't have things like upfront mortgage insurance premium. It's called upfront MIP, which is 1.75% of the loan amount added to your loan amount over 30 years. So it's a fee to do it. And then with FHA, you have mortgage insurance for life unless you put 10% down. Okay. So out the gate, we're looking.
So we're saving that. With conventional, we do not have the upfront mortgage insurance premium.
Correct.
And do we have mortgage insurance on a monthly basis?
Anything less than 20% down, you'll have MI.
You'll have MI. Okay. Yeah. So you still have that small MI payment, but you don't have the big upfront cost, which is 1.75% of the entire loan amount, right?
Yep.
So if you're buying a quadplex for $500,000 and you're only putting 5% down, I mean, we're talking about an extra $6,000-7,000
that gets added to the
loan
loan
amount. Gets added to the loan amount.
Okay, so just right out the gate.
And that's FHA. Yeah. But now that Fannie Mae and Freddie Mac have changed their conventional loan guidelines, where they say you can get into a 2-unit, 3-unit, 4-unit. You can put as little as 5% down, which used to be a lot more than that. Now it's as little as 5% down. Are you seeing that there are actually opportunities out there in the market to buy a 4-unit for 5% down?
Yeah, they tend to exist, and you being a landlord, I mean, they're out there, and it just depends on where you're at in the country. There's a lot of opportunities out there for multifamily. It is a great opportunity. Can you get affordable multifamily? Yes. Most often when you're looking at anything that's a 2 to 4 unit, they're not usually the most extravagant places, right? Because they're meant for a purpose. They're meant to have a lot of people on one lot, right? So you're not going to have this, mansion type duplex right? And when you look at truthfully where you're going to find duplexes and triplexes and quadplexes, usually in areas that need housing that are less or underserved.
Okay, I think one thing that's also important to note, because I've seen this too, is that I recently had a client who ended up buying a smaller multifamily, but it was more than 4 units, and we were looking, and one thing we noticed over and over was actually just a single family home that was kind of partitioned and subdivided with a garage conversion and then a wall added, and the back door was a unit. Now, is that a triplex according to FHA underwriting guidelines?
Yeah, it's zoning. It comes down to what's actually like legal.
This is not legal. No, this is zoned single family residential, which does not mean 4 units, right? And it had 3 units in this case. So I'm presuming that this would just be a regular conventional loan, not a multifamily approach to it, because the multifamily approach is a little different, where it allows you to take the rent income of the 2 additional units. So let's just say you find a true triplex, like a long building with 3 units inside, right?
Sure.
And with a real triplex that's zoned multifamily, you can use 2 of the rent incomes towards your earnings, your future earnings, so that you qualify for the your debt to income ratio, right?
Kind of. There's a little caveat to that.
But basically it allows you to add income.
You can offset the
whereas a single family that's been chopped up, you can't do that.
Yeah, single families can have things called accessory dwelling units, right?
Okay, yeah.
And
ADUs are like more common. You're seeing them a little bit more and more now.
And so we're in Florida, and in St. Pete, which is about 40 minutes north of us, there's a lot of the types of properties that you're talking about, where you have these old style homes that were cut up, broken up into multi-units. And I've done many of these old Florida homes that are now multi-unit properties. I've done it, right? And they qualify.
As a multi-unit?
Yeah.
Okay, okay, that's good.
So it's all how it's done, right? If you just have a guy that just put up a wall in his garage and didn't do any of the permitting, and it's like not right, well then it's not right, But you could, in theory, what does it take to have a unit? You need water, bathroom, electric, kitchenette.
Yeah.
Some type of kitchen, a stove, right? Like some kind of a stove to, you also need a bedroom, or maybe not, but you need a closet.
Yeah.
Right. A window.
Yeah.
Right. You got to have
a bathroom.
And a bathroom, right?
So you need its own bathroom.
Right. So, in the past, as construction went on and as things changed, exceptions were made, I'm sure, over the years, a lot of these units, right?
Yeah.
But in today's day and age, like if I wanted to go put bedroom in my garage, what would it take for me to call that a separate unit? Mm-hmm. Well, all those things, and done legally.
Right, exactly.
And done with permits, and done with the right way, because you could have the unit, I could do what I just said, unpermitted, but then when I go to sell it, I can't call it the unit like you're talking about.
That's right.
Right. Could I still rent it if I own the property and make rental income off it?
Yeah.
All day long, right? But when I go to resale, can I call my now 1-unit property a 2-unit property and try to sell it and market it that way? No,
that's right. And when we enter things into the MLS, we do look at how the county has recognized a property. So if it's a 6-unit, but someone kind of made a 7th unit, we can't call it 7 units really. We have to call it what it is. Okay.
Right.
So let's talk about one other thing, and that's what is typically called house hacking, where you purchase a property, just a regular single family home,
sure,
but then maybe there is a master bedroom suite with a private entrance with its own bathroom, and then it has like a little kitchen area in there with a microwave, with a stove, with a sink, with a fridge,
sure,
right? When you go to get a loan on that, can you use that as potential rental income if there's no legal status to this?
That's called the mother-in-law suite.
Yes.
Okay, yeah.
That can be used.
It can be rented.
Excellent.
Yeah.
So can that income be used towards your debt to income ratio?
So yes and no.
Okay.
Yes.
We're looking for the yes.
Yeah.
We're investors and we want to get into owning.
The answer is yes, right?
So
the answer is yes overall. It's just yes plus or just yes. And what do I mean by that? If you have no history of being a landlord, you just get a yes. And what does that mean? That means that any proposed rental income you would get from these additional units can only 75% of it can only be used to offset the mortgage payment. Example, if the mortgage payment is $2,000 and you're getting rent for $2,500, right? So that $2,500 is more than your mortgage payment, but you have no history. That means I can only give you 75% of 2,000 because 2,000 is the mortgage payment, not the rent.
Oh, interesting. I didn't know that. Okay.
So now let's say you're a landlord, you've been doing it for a year or have a year of property management experience. You could be a property manager and this counts for you too. Same scenario, rent's $2,500, mortgage payment's $2,000. But with the history, I get to give you 75% of $2,500.
Excellent. Excellent. That's good to know. I did not know that. Anything else you could think of when it comes to investing into small multifamily, how the mortgage rules have changed? You know, for example, one question that just came to mind is, what are the limits on those mortgages? There are, limits that it turns into a jumbo loan if it goes above that. So when someone's looking for a property with 5% down, what's the maximum price point of this 4-unit or 3-unit property?
That's a great question. So as you go up in units, the loan amounts go up. And I have a quick chart right here I'm just going to read. So for 1 unit, it's $766,550. That's a single family home. Okay. For 2 units, the loan limit is $981,500. For 3 units, it goes up to $1,186,350. And for 4 units, it's $1,474,400. So they understand that there's going to be more of a cost to the unit that's associated with it.
Yeah.
So it's a huge benefit there for going to
multifamily. So basically from those numbers that you said, if you're only doing like the 5%, the lowest amount, then add 5% to that price. And that's what the purchase price you could be shopping for.
Minimum
if you're doing
purchase.
a 10% down, then add 10% to that price, right? And so on,
Correct.
right? So that is actually really good news because that is a pretty significant property, when you have a $1.5 million 4-unit, these are nice units.
You can imagine that if you're going to go and be financing 1.4 million on a 4-unit, that the rent that you'd be getting from something like that would have to be able to cover it. It'd be an expensive mortgage payment. Think about that, right?
Yeah.
And if you're buying something that's that expensive, I would assume it's got to be in a nice area and a nicer unit and probably done up a little bit so that when you go to rent it, you're going to get some substantial rent from each unit that would, accommodate that.
Yeah, this is really all good news. So now if you have any questions about house hacking or buying multifamily, please reach out to us. I've been doing this for over 20 years. He has been servicing these loans and he knows exactly what you need to do to qualify for this, right? Our links are below, yourhomelender.com, or you can go to Sarasota.com, but we have direct links and you can even book calls with us. So thanks for watching. See you next time.
Have a great day.